Joining us live from the White House, Chair of the Council of Economic Advisors, Jared Bernstein. Why aren't you getting credit for this soft landing, Jared?
Well, look, people have been through a ton over the last couple of years that you just mentioned. Obviously, a 100-year pandemic. You've had invasions, the war in Ukraine, the horrific events in Israel and Gaza. And look, at the same time, back there in Feb 2020, we saw supply chains snarl up and unleash a global inflation that took prices to a 40-year high. Now, we took quick action when we got here, particularly on the supply side. Supply Chain Disruption Task Force that I was a card-carrying member of helped to coordinate some of our work in the ports. And if you now look at indexes of the health of the economy supply side, they're back to where they were pre-pandemic, and goods inflation has been flat or negative. By the way, gas fits into this discussion as well. It's down for 38 consecutive days, down $1.70 from its peak in January of 22. You fill up a 15-gallon tank with $1.70 breathing room there, and that's $25 of savings. Do that a few times a month, and it helps the bottom line. So we think some of these trends are moving in the right direction, but no question we have more work to do.
The other thing, though, that you did when you guys came in is you passed the American Rescue Plan Act, which is $2 trillion of extra stimulus at a time where the economy was already rebounding. And many on Wall Street would argue we did not need that, and that fueled inflation even more. And that's part of the record, too.
So I'd push back pretty hard on that in the following way. I just mentioned how global supply chain snarl-ups contributed to the global inflation. And as you know, inflation peaked at over 9%. Well, now, last seen, inflation is down 2/3 from that peak, about 3.2% last seen. Now, that has occurred, and you just said this yourself when you talked about a soft landing. That has occurred while giving up almost nothing on the demand side of the economy. The labor market remains tight. This was Joe Biden's message to his team. We want to ease inflation without giving up the tight labor market. If you have a tight labor market and inflation down by 2/3, that tells you that it's largely a supply side phenomenon that contributed to that disinflation. People call it immaculate disinflation. I actually don't believe there's anything immaculate about it. I think it's the normalization of supply chains. When you come, and by the way, when you're talking about the rescue plan, ask yourself why this economy is doing better than any other G7 economy. One reason is because the president got shots in arms and checks in pockets to an ample enough magnitude to get us to the other side.
No, I mean, no question. We got a bigger jolt of stimulus. But, you know, there are also questions now about how much debt we have to issue next year and whether there are going to be any buyers on the other side.
Yeah, that's a great question. It's an important question. And there we have, I think a real responsibility to pass the president's budget, which has $2.5 trillion of deficit reduction. We are acutely aware of the dynamics of debt in a higher rate environment and are actively and aggressively proposing measures to do something about that. And, since the president got here, of course, he's engaged in significant deficit reduction, most recently in the Fiscal Responsibility Act, which took $1 trillion off the 10-year deficit.
Jared, I'm sure it's not a surprise to you that a lot of the public is not just looking for disinflation or slower inflation, but actual deflation, rollback of prices back to whatever, 2019 levels. Is that something you would welcome, or do you lean on the historical relationship between that and falling wages and recessions?
Right. Yeah, I think a broad deflation is historically associated, just as you said, with a far weaker economy than we have and that we'd want to see. I think in areas where prices went up, really a great deal and were highly elevated, there you want to see prices come down, not just disinflation, but deflation. So let me hit you with a few numbers. So airline tickets down 13% over the past year. Car rentals, 10%. Eggs, 22%. Thanksgiving dinner, to be a bit topical, down 4.5%, with turkey down about 6%. That's deflation. That is lower prices in those areas. We don't want to see a broad deflation because that associates with a widespread deep weakening of the economy. But in areas like used cars, down 7%, used cars and trucks, those very elevated prices, yes, they have come down. We like to build on that progress.